weekly ramp up, but this time it's not just that, it's inflation. We were expecting inflation is one of the key events that we have today, that we had today after ECB, and also it will show the path for Fed next week. So I have just published the events to look out for next week. It will be a massive week ahead. So you need to be a bit careful. Next week we have four banks reporting. It will be the Fed, Bank of England, SMB, and Bank of Japan as well, all reporting next week, all announcing that rate decision and doing their press conference as well, all of them. So it's expected to be a very volatile week ahead. So four banks all at once, all at the same week. Now, we are just 7 minutes away from the inflation number in the US. Okay, since we have a few minutes, I'm gonna go through, as usual, what is going on. I mean, to brief you with what's going on and etc. until the data are out. But don't forget, next week, as I said, we have four central banks, so it would be it would be good for you to get prepared over the weekend in regards to next week's gigantic uh, agenda, if I can say that. So, nevertheless, let me brief you up with what's going on right now, where we're standing right now ahead of the inflation number soonish from the US. So, what we have, I need to share my screen as well. Let me just quickly do that. Here we are. Perfect. Minimize Andrea. That's good. Okay, so I should get rid of Bitcoin for now at least. Let me go a bit on the stock side. That's the S&P 500 in the 1 hour chart. So what we have ahead of the inflation, which is in 5 minutes from now, we have seen so far today the the treasury is lower under pressure, especially the long-term ones. So, for example, the 2 year one has spiked. The euro bonds also a bit mixed because we had ECB yesterday as well, as we have seen, and as you explained yesterday during the live analysis. ECB literally kick off the tightening with a quarter point, as you already know. Ms. Lagarde put clearly the central bank, on the course of a series of rate hikes. And actually, that was pretty much expected because they cannot do otherwise. So they kick off with a quarter point move in July and a possible half point hike in September. They are taking it slowly in comparison with other central banks, but there is no really another way to control the inflation, especially with all the things that are going on and with the Ukrainian situation still on. So we had a pretty hawkish ECB confirming the liftoff on rates, with Ms. Lagarde confirming that gradual increase of rates. So I'm taking you back to the stocks since we have the USA 500 over here. So far today we have seen treasuries cheapening. Okay, so European bonds mixed, gilts down. Gilts is the UK yield, don't forget that. US equity markets also a bit sideways. You can see that sideways, they're a bit mixed ahead of the inflation right now. So in general, equity markets globally deeply in red. So it will be very interesting to see how the week will close for the European bourses, for the US futures, for UK as well, because other than the upcoming events and other than ECB that we have seen yesterday, other than the inflation that will be out soon, is the stagflation fear. Okay, it's the increasing concerns of stagflation because regardless of the central banks, we keep getting economic data that presents recession, present contradiction, and not from a single region. That's globally. So there are increasing concerns of stagflation, and this is what is overall driving the market. So dollar, let's just briefly. Dollar on the flip side, we have seen it a bit firm at 103.60 territory. So what actually there wasn't a lot of news today, okay, other than the Chinese inflation this morning that they came out steady as well, and with Russian central bank cutting rates by a large than expected 150 points. So that were these were the only news that we had today. Russia central bank cutting a key interest rates by 150 points to 9.5% on today's meeting. So they have do that. Actually, that was bigger than expected. Than it was expected from the markets, but it's a way to also support the ruble and also the borrowing costs that they are facing. They brought the borrowing cost back to the levels before the invention. This is what they try to do at least. Yeah, but that was pretty much it. So we are just a minute away from the. Let me just a minute away from the data. So I'm gonna share as usual, as I usually do, the calendar with you. Oops. As you can see it, let's check together the data. I'm gonna refresh because they will be soonish out. And they are, along with unemployment data, with the labor market labor data from Canada. So, okay, here we are. Inflation at 1% from the 0.7% expected and well above the 0.3% last month. That's the May's reading. What we have over here, the non-seasonal adjusted number slightly higher. That's not a significant reading anyway, excluding food and energies. So we have a steady number on a monthly basis, but above forecasts. Okay, so the year one increased from 5.9 to 6, a bit lower from last month's reading, while the year, so the headline number is at 8.6, increasing by 0.3% from the current headline. Okay, so that's definitely not good news from US, definitely. So I'm gonna try and get back to dollar. Guys, as usual, as I keep saying, that's your session. So feel free to ask anything you want. Okay, let me share. Let me share with you the dollar index. By the way, since we are watching the calendar, what we have over here is unemployment slightly lower, not significantly though, nothing really to uh, signal a decline on the unemployment rate for Canada. 39.8 was the employment change for May. That's a slight improvement, and participation steady. So very, very neutral, in line with expectations, data out of Canada just now. So let me stop sharing that. Get back to the chat. Hi, Waylon. Hi, Mo. Lesotho, Nigeria, Ghana. Welcome, everyone. Welcome. Glad to have you here. So, if it's the first time, if it's the first time that you're actually participating in these events, feel free to ask anything you want. So, just literally write down. I mean, the comments box your questions. If there is an asset that you want me to check If there is anything that you don't understand from fundamental perspective, technical analysis perspective, let me know. This is your session. Okay, so I went back to dollar index. This is dollar index 30 minutes chart. We had a spike on the data at 103.75. Okay, as you can see over here, 103.75. If I zoom out a bit, these are the just okay. You see that looks like a rounding top, but nevertheless is back to April's territory with the next. Okay, here we are. With the next resistance area, obviously at around 104 or 104.12, which is my upper Bollinger Band, daily Bollinger Band um, level. Now, how this spike, this extension actually could be explained. So what we have, okay, the fact that inflation increased, okay, and the fact that not only the monthly inflation, but also the yearly inflation has increased, can be translated into something negative for the markets, but that not necessarily means that it's negative for the dollar. What I'm trying to say, the fact that we're seeing inflation rising, it means that the so far actions from the Fed weren't that effective. Okay, so that's a signal that next week, due to the rising inflation that we have seen just now, the Fed need to proceed with its tightening actions. Okay, like all the other central banks, in order to bring down the prices on a monthly basis and an annual basis as well. So the fact that we didn't solely see the headline rise, the monthly basis rising, but also the headline rising, that's the key. It means that they need to do more. Okay, they need to do more, because an immediate action is necessary in order to pressure the prices down as in June and July, due to the ongoing impacts from the war, the trade disruption, the lockdown in China. That's affecting the US as well, because let's not forget that China is one of the biggest consumers, especially of energy, okay, of energy. So yeah, it's a lot of things. Everything is correlated. So the fact that the inflation increased today clearly clears the path that Fed needs to act next week, and actually needs to keep tighten, because the current tightening hasn't really managed to pause at least the inflation. Now, why we initially saw the Alamin, welcome from Nigeria. What makes the dollar okay, that's a fair question. So I'm coming back to you right now. So, and that's where I was about to go right now. So you can say that, okay, we had not negative reading, but a rising inflation. So okay, that's supposed to be negative for a negative number. That should be something that should add pressure on the dollar. However, on the release, we have seen a spike. Okay, so not really sure whether this is some kind of a safe haven reaction, or just or just due to the volatility. But this is something that could add pressure on the dollar for the upcoming week, my dear. Uh, was it my dear Sato? So we cannot really tell, but uh, uh, actually, let me take it step by step. Okay. inflation is rising. So that means that there is no impact from the Fed, right? So that means also that the Fed next week should take further action. The tightening next week is anyway expected. But remember that theoretically, the tightening, right, implies to a stronger currency for the particular country. So that is also the reason why we keep seeing since April last year a very strong dollar. This is unlikely to change because the markets have been priced in the tightening from the Fed a long time ago. And remember, we currently, if I just solely focus on the Fed futures, okay, uh, on the Fed futures. The Fed futures are currently the Fed funds futures to be more precise are currently lower. So um, uh, so what that means, okay, the futures, by monitoring the Fed fund futures, we are getting clues on whether the market is pricing in already the 25, 50, 75, 100 rate hikes from the Fed. So currently the futures are pricing in at least 50 points in rate hikes over the next several policy meetings. Okay, I'm referring to June, July, August, up to September as well. Okay, so for the timing, they are pricing at least 50 points. Okay, so and if I just Okay, I'm not gonna share the calendar again, but if you check your calendars, you're gonna see as well. No, you're probably gonna see uh, that the most of the calendars are at least are presenting their which are presenting their forecast for next 2 weeks, are presenting an expectation that the Fed could it increase next week around let me just be precise on the mistake was 25. I'm not sure whether this changed, but yeah, oh no, it's changed. It's actually they are currently we are currently seeing that the expectations for next week is that the Fed will increase 50 points in June. So overall, overall, if we indeed see 50 points increase next week, that means that we might see a repetition of the 50 points in July as well. So more are coming. So on that, with that on the back of our minds, overall for the whole year, the dollar is expected to remain strong. The more the tightening, the stronger the dollar it is. That's a fact. That's in the theory. I mean, in general, if a central bank is increasing rates, that's supporting the dollar. Is increasing the value of the currency. Okay, and remember, market is all about the sentiment. So sometimes we are seeing markets pricing in something ahead of the time, and this is what happening for nearly a year now with dollar. Dollar is expected to remain strong because of the Fed. Okay, so and we can see that this increase, okay, started the latest rally that we've seen started since the end of May. Okay, and that was because of the continuous hawkish Fed members, Fed comments that we kept having. Remember Brainard, remember Bullard, remember all these. So we had a lot of Fed speeches supporting the hawkish stance, the further hawkish stance from the Fed, and that was the reason that dollar was on bid and remains on bid, even though the inflation today is expected to actually the inflation today rose. So we might see, as you can see, this 30 minutes candle has already turned back to the open price. So we might see ceiling because after all, inflation is um, is high, so that's bad for the economy. So increasing in prices, stagflation, fear. Actually, this technical recession is still is there. We can see it, we can feel it actually in our bonds, because I know that you're suffering as well. I mean, the price of the petrol is like enormously high, so you can see from the grocery shops that you are going, from the petrol stations, etc., that the life is getting expensive and expensive. So stagflation is there. Technical recession all over the world is there. But why dollar remains on beat? First of all, because Fed has proceeded for months now in a very, very aggressive tightening, and it is expected that he will keep doing it. And the markets are ahead of the Fed, so they are already pricing these 50 points for next week. And second, let's not forget that dollar also reacts as a safe haven. Okay, this is not the case now for the time being in this 30 minutes chart, but don't forget that next week is the Fed and the markets are pricing in. Okay, so what we mean by pricing in, they are trading on the expectation that the Fed will increase rates by 50 points. Okay, is that clear, my dear Thado? But this is what I just explained affects your daily, your weekly, and even monthly trading. Now, intraday now is something completely different. Okay, obviously we need to wait for this candle to close. We have seen a spike, but we had a pretty nice and quite long down leg as well. So we need to wait and see in the very near term, this is a 30-minute chart, to see how this candle will close, okay, in order to check together, to analyze together the near term, the intraday performance of the dollar. Okay, so we have another 15 minutes for this candle to close, but as you can see in this 30 minutes chart, momentum is still on. Actually, let me put my, okay, no noise, everything is over here, so we are good. Just okay, what we have over here, we have from the one side the MACD being well above zero, so bullish signal. Okay, fast moving average are keep pointing higher, RSI the same, but stochastic, which is my immediate, my very near term, short term indicator, it has posted some kind of a bearish cross. So we cannot really tell whether we're going to have a correction like this one, okay, until we have seen this candle closing. So we have another 14 minutes for this to be done. So in the meantime, I'm gonna, okay, we have people asking about Kiwi, CAT, and pound. So first come, first serve. I need to start from the Forex trader. So I'm gonna go elsewhere, and we're gonna come back in 16 minutes, in 14 minutes, sorry, once this 30 minutes candle close for dollar, in order to see what we are getting from that one, whether we're gonna see some kind of a correction, a continuation, some sideways movement, etc. But keep in mind that overall, in the long term, medium trend as well, dollar remains on beat. Let's not forget that it's above its 20, 50, and 200 moving average, recouped the 103 level. Next resistance at 104, which if it confirms, if we see further boost above it, then the next resistance levels are up to 105. And I cannot go backwards, but there is a lot of momentum, okay, this year, a lot of momentum. in 2021. So, the pound. Hello, nice to meet you, Subhao. Shabhamoy. Shabhamoy. Not sure whether I pronounced it correctly, but okay, cable. Okay. I need to add a bit on the cable because it's not only the strength of the dollar, but it's also the weakness of the pound due to the politics as well. Okay, so uh, we have lots going on in UK, as you already know, as you might already heard, with Boris Johnson, the non-confidence vote, and etc. Something that has extended the losses of sterling. So it's not solely the dollar strength, but it's also this political tabloid that is going on in UK. Bank of England is next week, by the way, as well. I did mention that. I'm repeating myself, unfortunately. I don't know why I do that. So Bank of England is next week. Sorry. If I remember probably it's on Thursday. And we are expecting um, also a tightening over there, but 25 points, not like the Fed. So 0.25 points rate increase are expected from Bank of England next week. Excuse me. What else I wanted to say? But yeah, it was also in regards to the pound. It was also everything that was going on with Boris Johnson. So it was also the political skin that is pressuring the pound over here. So what we have over here, let's do a bit the technicals, okay? By the way, just to remind you that from UK this week, let me just come on. Yeah, here we are. Other than the non-confidence vote, with 40% of Johnson's party voting against him, other than that, we also had if I remember properly, we had some the consumer inflation expectations out, suggesting that the increase of inflation in UK as well. Okay, we didn't have significant news out of UK, but you need to remember the unemployment, the GDP, the manufacturing industrial PMIs that we have seen yet last week, and etc. Everything actually presenting a deterioration. I cannot say that word. A contraction of the UK. And let's not forget what the governor of Bank of England said. It was 2 weeks ago. I'm not really sure. They clearly said that UK economy is at risk, is facing stagflation, recession. They clearly said that UK is in a recession. We can see that from the data. We can see that from the numbers. We're expecting that. We're already in that. So it is what it is. I mean, that explains the decline that we have seen since last year. So that's the daily chart, weekly chart on. Okay, we had a small correction at the beginning of May, and which turned down. And currently, as you can see, I will insist a bit on the weekly chart. I will explain why. I know that you are interested in the intraday chart, but I will explain why. So sterling cable is in a downtrend since the 142 level. Not sure I remember when was that, but that was back in February last year. Okay, and we are in continuous decline with some corrections, big or small ones, but still corrections. The latest leg to the up leg that we had. It was in the beginning of May, um, which now is in a pullback, confirming the continuation of the preceding downtrend. So remember that a very important key support level in the long term, okay, for the asset, and long term, medium term, I should say, okay, is this area over here that I have drawn for you last week, if I'm not mistaken. The area between 122 and 120. That's the next step for this. The next support for this term, uh, long term downtrend. Nothing is signaling that this long decline, uh, da- uh, uh, long term downtrend is running out of steam. We have actually it's the vice versa. The MACD, as you can see, is keep increasing to the downside, right? Ignore stochastic, and I will tell you why you should ignore stochastic, because my stochastic is my short-term one. It's the one that we use for 1 hour charts and 30 minute charts. So ignore it. RSI flirting again with the 30 barrier and pointing downwards. So suggesting that sellers are back in control and gaining back the control of the downtrend. Something that uh, brings into the attention this area. Now, in the intraday basis, whoa, the data supported the dollar, and I remind you that might be a bit bizarre why the dollar is getting strong. It's not because of the rising inflation, but it's because of what the rising inflation means. Rising higher inflation means tightening, further tightening. So on the data, we've seen cable drifting to 123.90 territory. Okay, so so let me just zoom out of it. So the next support level for the asset is down to 123.26, which is my latest down leg, down fractal, and around 123 level somewhere here I have. So this is these two are the next immediate support levels for cable. If we consider that has broken this floor, this temporary floor that we had for 2 weeks now, yeah, it has broken that sharply. Okay, so that opened the doors to the next support level, which is the 123.26 and around 123 level. Okay, if you need anything else, my dear Sub Hamoi, let me know. Uh, okay, gave a priority to Thado because I have seen that he's has lost his trade for dollar ZAR today. Just I didn't understand what was happening. What we keep saying is that you should either avoid having open positions during such an important events, or if you want to trade the news, make sure, okay, that you do an appropriate risk management. What I mean, your stop loss shouldn't be far away, right? Not too tight either. Risk management. So what I mean, set your target, set your stop loss, choose a logical and reasonable ratio, risk and reward ratio, 1 to 2, 1 to 3. That's it. Pretty clear. Make sure that you put your stop loss at the level that you are okay losing. What I mean, if something goes wrong like that, like today, okay, which is not that it went awfully wrong, but you were against the trend, I assume, my dear Thado. If you had set your stop loss at the level that you were okay losing, what I mean, I am okay as an Andrea, I am okay losing $20, for example. So I should set my stop loss at that appropriate distance. So set your stop loss at a distance that it won't hurt you. Okay, it will not blow out your account. It will not make you anxious. It will not hurt your feelings. It will not make you greedy, and etc. Okay, so and also with this way you might also avoid the noise of the market, because during the news, this is the 30-minute chart. Sometimes, okay, in this case we didn't see um, a down leg as well, but sometimes we're seeing some spikes before it comes on our favor. Okay, so in order to avoid the noise, you can either wait for the data to be released before you take a trade, or setting your stop loss at the level that the market voice could be avoided. Okay, so um, you are welcome, dear Thado. Let's go to the next question. Was Dollar Cat? Sorry for making you wait, dear Tidik Jong. Yeah, okay, as you can see, okay, the candle needs another 2 minutes to finish. This is dollar index. I went back to dollar index. But yeah, it keeps pushing higher, breaking the 67 area, 103.67. That was the high of the day. It's broken. It was broken. It keep rising. It's at 86, so just few pips away from the 104 territory, which is our 104 and 104.16. It's my Here we are. It's my resistance area based on the upper Bollinger Band territory. So yesterday's bullish candle, it seems that though it will be followed from with another bullish candle, but let's wait and see. Okay, let's wait and see how it will close. Another minute remained. I will wait a bit because I want to see how it closed, and it just closed. So look at that, guys. Okay, that's very interesting. I'm gonna zoom in this. Okay, full body candle. This is a 30 minutes candle, and for dollar index, full bodied candle, no down legs, no up legs, full bullish candle, and that's pretty much it. It's a bullish candle with no tails up, no tails down, clearly stating that bulls are in control in the very, very near term. Okay. Um, Hopefully, yeah, you did hear me. Exactly, my dear Thambash. Exactly. Um, it was pretty much it was pretty much we pretty much expected the rise in inflation, so that's why the markets were in a rally. The dollar was in a rally since the beginning of the day. I mean, the anticipation of a rising inflation. So what we have over here is a pretty strong dollar. Okay, so fast moving average higher, Bollinger's higher, MACD increasing, RSI remain above overbought territory. Sorry, this stochastic. Um, RSI above 70. A bit of a you cannot see that. No, you can. How yeah, can I do it? Yeah, the RSI over here, it dipped slightly lower, but hasn't turned below 70 yet. So what's going on? What we have over here? Obviously, okay, we have in momentum indicators over here an overall bullish momentum, but RSI over here, it turned slightly lower. It started pointing lower. Why is that? Because this is overbought. You see, it closed outside Bollinger's. So what that's supposed to mean? That needs some kind of a correction. It needs to get back within the Bollinger Bands area. So we might see some sideways movements, okay, before another attempt to the upside. Why am I saying another attempt to the upside? Because if we go higher in the 1 hour, okay, or even 4 hour chart, etc., then we keep having higher highs and higher lows, right? Daily chart the same. The momentum over here, the MACD turned positive, RSI pointing higher, RSI is at 60, keep pointing higher, so the overall picture is positive. So, however, intraday, because this was a very bullish candle closing outside Bollinger, so that's overbought. So that's an overbought condition. We might see some sideways movements, okay, a bit of a pullback, some sideways movement before the asset starts extending gains again. Okay, so what we have over here, I love using Fibonacci's, you know that. Okay, I'm a Fibonacci girl. So actually, I'm not gonna use that. Actually, gonna use that. So I have put my Fibonacci on the latest leg, down leg. Okay, can you see that it coincides with the 104.12 territory that I taught you earlier? 104.12, it's my upper daily Bollinger, and it's also the 261.8 Fibonacci extension. So that means that this is a strong resistance area for the asset. Now, for the time being, on a potential pullback, which is something that we started already seeing, immediate support could be seen, oops, at, come on, 103.50. And why I chose that is 131 Fibonacci extension, but also coincides with this latest resistance that it could be turned into our immediate support. If the asset corrects a bit or moves sideways until the overbought territory is over. So if our asset turns down but finds some kind of a support, I don't know whether I can draw over here, but yeah, if it's side, can you see my mouse? So if it's like find some kind of support sideways until it exits the overbought territory, and if that support is it's above 103.50, then that means that bulls are still there, and that is just a correction. But if it comes below 103.50, okay, we might see a reversal back down to the 103 territory. Okay, over here and over here. Okay, that would change the outlook. So keep an eye on these immediate support levels. A correction is needed because it's overbought, but overall the asset remains in um, remains to the upside. If it turns down, breaking 103, okay, 103.50, then it might test the 103.30 or even the round 103 territory. If that breaks as well, then the doors open for the 20 or even 50 period moving average. Is that clear? I need to get back to dollar CAD because Titin Jong asked for it from the very beginning and Andrea never managed to. So I'm gonna start from the daily chart. This is dollar CAD, very busy, very busy as usual chart over here. But what's going on? Dollar CAD. So I'm gonna clear a bit. What we have? Okay, here we are. We have some very, very interesting candles since yesterday. So that was yesterday's bounce. So far this is today's candle. Okay, so interestingly, we have seen the asset rebounding, getting back above, sorry, getting back above the 200, the 50 and 20-day moving average. Okay, so that raises a lot of questions about next week's trading. Why is that? Because this is a sign that this down trend is running out of steam. Okay, you see, not solely moved up above 20, 50, and 200-day moving average, but already managed just in 2 days to recover more than 40% of the losses that we have seen for the whole May. Okay, so it's very, very important for you guys to check how this weekly candle closes, whether we'll manage to close above the 20 weeks moving average, above the 127 territory. Also, we'll zoom in and I will show you over here what we have over here. Something that comes in contrast with this bounce. We have the 20 extending below the 50. So that's coming in contrast. This is a bearish signal. It's a bearish signal, in a near-term bearish signal. But so if so keep that in mind, because if the asset struggles to extend a lot gains, so if we don't have the beginning of an uptrend and it turned down today, closed lower today, then this might be just some kind of a near-term bounce. Okay, because anyway, the fundamental support is strong Canadian dollar due to the oil prices as well, the correlation with oil prices as well. So keep an eye on dollar index. Keep an eye on whether we'll manage to close above 127. Okay, how the Friday's candle will close, whether we manage to close above 127 as I mentioned, and whether on Monday this bearish cross is still on. Let me check something. Exponential, what we have over here was down, then nothing. Okay. Okay. So now intraday. Okay, what we have intraday, nice rebound. That's the 4-hour chart. The reason why I put the 4-hour chart is because the previous support level that we had seen 2 weeks ago, it has broken. So that was a support level, turned into resistance area, and it has just broken today. Okay, and that with MACD keep rising. So bulls are in control still, but that brings now into attention the 128.70 territory. So the resistance, this resistance that we have seen, that we had seen back into the mid of May. Very interesting. So, okay. So, correction, boost, overbought, a bit of a correction. Momentum still very, very strong, positive momentum. Stochastic above 80. slowing down a bit but still up. RSI slowed down a bit but didn't cross below 70, so we might see a bit of a correction, but overall the asset remains on bid. So next resistance areas are to be closely watched, guys. As you can see, you can use the inverse Fibonacci to find your next immediate resistance area. So over here, based on my Fibonacci's, okay, let me zoom out. So 127.80, 127.890, which is the area. So it's the 200 period moving average and the 128 Fibonacci extension. And the very next one is up to 161 extension, 61 Fibonacci extension at 128.26. Okay, is that clear? So the strong dollar, along with a pretty neutral data from Canada, they have helped the dollar CAD rebounded and extending yesterday's rally. Um, so, what else? But I remind you, just to make myself clear, that in line with don't forget that that oil remains in a rise. So that might provide some kind of a ceiling to the dollar cap. Tanzania, Philippines. Nice to meet you guys. Nice to have you here. If there's anything that you don't understand, let me know to repeat myself, okay? Kiwi. Okay, let's go to Kiwi, but let me make sure that everyone understood the so far news. Yeah. Okay. You need to clear, dear Thampak, what kind of trader you are. Okay. Fundamental analysis cannot be really applied for 30 minutes charts, 15 minutes chart, not even an hourly chart. Fundamental analysis is a more daily, weekly, monthly, so medium to long term analysis. And it's good to be aware of the fundamental analysis because you will be able to identify and confirm the overall trend, the long term, the overall picture of an asset, of an instrument, of a stock, and etc. But yeah, you need to respect both. And you need to make sure that you have identify what kind of trader you are, what makes what kind of trader you are good, what kind of trader you are, because each one of us is different. I mean, there are people that they cannot really trade in a less than a minute chart. That makes them anxious. There are people that, because of their lifestyle, they prefer to set their trades at the beginning of every month for a long term. They are medium term traders, so they based their trades in a combination of fundamentals and technical analysis, but most probably in a weekly and a monthly views in a charts. So yeah, you need to respect both, unless if you're a 30 minutes, 15 minutes trader, 5 minutes trader, which that's solely a technical analyst and a technical trader, technical analysis uh, think. But still, you need to be aware from the fundamentals because you need to avoid the data. We need to avoid trading such a you need to avoid trading if there is a big uh, event coming. So you cannot really open a 1 minute chart or a 5 minute chart if we have an FP, if we have inflation from US like today, because it will probably kick you out. It will probably kick your stop loss before comes on your favor. So There are a lot of kind of traders. We need to respect both fundamentals and technicals. It's very significant to identify the indicators that make sense to you, not the one that I'm using. The ones that make sense to you only. Maybe MACD doesn't make sense to you. Don't use it. Use something that makes sense to you. Maybe you're not a maybe you're a price action trader. You don't need to use indicators. If you're a price action trader and you are solely focused on what the candles are telling you, what the price is telling you, fair enough. So you need to identify what you like to do, what suits you, what is best for you. Okay. So coming back to Kiwi, Kiwi was it? Yeah. Sorry, I make wait, Sharon. But probably you know the answer. Uh, yes, Kiwi wasn't. Where do I have Kiwi? Have dollar cut, Kiwi cut over here, but where is my Kiwi? Kiwi dollar. Mm, let me find it. It is perfect. So yeah, you said about okay, you were speaking about the overnight session. I assume because you said that Kiwi much stronger today. Kiwi was strong during the Asia session, okay, but we had a reversal since the beginning of the day, not the beginning actually during the European Open, and a big dip, breaking the immediate floor that we had yesterday night, as you can see, breaking it and extending lower. So what we have, actually, thank you for bringing up Kiwi. Why? Because I can see over here that my fast moving averages, come on, over here. Can you see? They have been bearishly crossed. This is the 1 hour chart, Kiwi, bearish cross from my fast moving average, extension of my MACD below signal line, RSI overbought, but still a lot of space to be covered over here. If you can see, no, you can't. If I do that, I think you will be able to see. Yes, you do. You see, there's no sign that it's turning back higher again. So there is further steam down for stock, hashtag. RSI the same, flirting with the 30 barrier, didn't cross it yet, but is still there, unable to come higher. So this bearish crossover here and the fact that fast moving averages are aggressively pointing down suggests that there is a lot of selling pressure into the market. So the next floor for Kiwi, by the way, let me put on. Oh, where is my? Oh, sorry. Here we are. Okay, it's my channel. So, okay. What we have over here? We have that's nice. That's cool. So, okay, that's very interesting. The resistance that was seen in the beginning of May, you see these consecutive up fractals, has broken. So the next, let me just see that. Okay, the next support level okay, for the medium term. That's the daily chart and intraday as well, but it's far away from now. It's at 0.80, 6290, or make it round, 0.63, just to be precise, 63. That's the next support areas for the dollar in a medium term basis. Now, immediate support levels, okay, immediate support levels now could be seen by, so for those that are, you are intraday traders, guys, set your Fibonacci's vice versa. I'm using what I had done. I've put it vice versa, and I can see my Fibonacci extensions. It's not that easy to show you, but okay, found it. Or if I put the 30-minute chart, it might be even more visible. It is a kind of okay. So next support levels for the day: 63.65, 63.57, and 63.40. That's the support levels for today, the immediate ones. Okay. But as you can see, the asset remains in line with, so I'm gonna get rid of it, okay, with, oh no, the asset remains in line with the down channel. So remains in a down channel. So don't forget that the lines of a channel could be useful for support, resistance levels, so there's targets and stop losses. So yeah, overall a very bearish outlook for Kiwi against dollar. Okay. Um, from Borno, Nigeria. Nice to meet you. Hello. Euro dollar. Yes. It should be to the up, to the downside, considering how strong the dollar is right now. Uh, boom, boom, boom. And we die. It is what it is. What can I say? Broke 106 territory. Is a breath, so it's just at the lows of 105. It's at 105.30 for the time being. So 105, the next support level for the euro dollar, which also coincides with the support over here seen back in the beginning of May. And so let me clear a bit. So what we have over here, that's the daily chart. Yesterday, the dollar crossed, aggressively broke the 20-day moving average. The extension lower, the decline continued today quite aggressively as well, breaking the 105. So pretty much that has opened the doors to May's lows. Okay, guys? So next support at 105 and 104.60. Okay, that's the medium term. But yeah, stochastics keep pointing lower, RSI keeps pointing lower, a bearish cross of fast moving average, the asset for 2 consecutive days to the downside. And the important is not the indicators, the important is the body of the candles. So yesterday, even though we have a tail higher, the sellers took the control and closed the day very close with the lowest price. So that means that sellers have gained the full control of the asset. So wait to see how tonight's candle, today's candle will close. Because if it's as bearish as this one, I mean, the fact that the close price is pretty close to the low price, that means that selling pressure is way bigger than bullish pressure. Is that clear? So that brings into our attention the 105, 104.60, and 104 level. Okay? So a bearish, overall bearish outlook for for euro dollar. Intraday now, same conditions. That's the 1 hour chart. Sharp pullback, sharp decline, oversold for now. So a consolidation might follow. Some sideways movement might follow because it's oversold. But overall, as you can see over here, a very big aggressive selling is going on that suggests that this drift might extend, being extended. Guys, okay, I'm already an hour live. I'm gonna check a bit the news to see what else is going on. But if you have further questions and further assets that you want me to cover, now is the time to tell me about it because, we are already live for an hour now. So let's go back a bit to the Bitcoin to see what's going on over there. So 1, 2, 3, 4 days to the downside. Today it has turned below the 20 period moving average, very narrow Bollinger Band suggesting consolidation, so remains stuck apparently around 29 and 30 territory. So nothing really exciting about the Bitcoin yet. Oil, gonna put the daily chart on, remains to the upside, 2 pullback days over here, so back to 120.70 territory. But yeah, remains in a rally, so 124.90 remains the key resistance for the asset. Let me check whether there's anything. Any news from China? Any further comments about the Shanghai's lockdown? Remember, on Saturday, Shanghai will close to have massive tests. But if for any reason Shanghai announced that they will extend lockdowns, they will resume lockdowns, that could support even more the oil. So if the 124.90 level breaks, then the next levels to be seen for oil is back to 130 and higher. Okay, so is the fear of demand, okay, of low demand. If Shanghai closes, okay, just to clarify this. Now, if Shanghai continues its operations, then that could slow down a bit the rally in oil because China's reopening suggests demand expectations. So that might ease a bit the oil prices. What else? Let me check whether there's dollar yen. Yes, why not? Dollar yen's in a big rally seen for centuries. This is the weekly chart. Boom. Breaking this week the 131.45 level, spiking to 134 area. These are levels that we haven't seen since since 2001, and even back to 2009 to 1998. There is a lot of momentum for dollar yen in the long term. So the dollar yen, from fundamental perspective, this differentiation of the policies between the Fed and Bank of Japan supports the big bullish momentum that exists in dollar yen. Okay, so the next area to be seen is up to 136 level, and the very next one that I'm referring to, the long term, is back to 139, and so on and so forth. Now, in the immediate, in the near term, I mean, for next week, for example, okay, yeah, the 136 and 136.50, it's the resistance area that we might face next week. But you see, it's bullish momentum. It is, I mean, yeah, it has to do with the policy differentials. Okay, 1 hour chart now, intraday, what's going on? You see, we have some ups and downs intraday, some kind of corrections, but that's pretty much it. The ceiling over here is at 134.47, and we have some. Oh, that's interesting. Let me see something. So the asset has like a resistance, intraday resistance at 134.50, and it looks something like, cannot really tell yet, but uh, one, two, three. Looks like a head and shoulders, but an inverse one. Inverse head and shoulders. Very interesting. So if it breaks the 134.50, so go higher, that's a bullish momentum. That's a bullish signal. For the time being, as you can see, it's struggling a bit. So a very dodgy candle, indecisional candle, currently to the upside, but yeah, we need to wait a bit for this to be clearer intraday to see whether it will extend and retest 134 or not. So very, you see, flat MACD, flat stochastic, flat RSI. So we cannot really tell whether it will go up and retest the 134.50 once again, or whether it will continue sideways or something. So a big question mark intraday. But keep an eye on this resistance area. Okay, a pullback away from this resistance area could retest again the 134 and the 133.50, which looks to be the immediate bottom of the last of this week's trading. Okay, so guys, that was pretty much it. If you don't have any further questions, I will call it a day. We'll finish actually with stocks because they are sharply lower on after the inflation shock, right? Remember, okay, something to remember. High inflation implies to further tightening, so are increasing the interest rates. That theoretically is good for the dollar, but bad for the US stocks. That's why stocks are lower, aggressively lower. This is S&P 500, a very bearish candle, full body candle, extending losses. So the decline, the drift of stocks might we might see it extending. So with the stock market, we might see the stock market extending gains in the upcoming days. For the time being, down. So S&P 500 is down to 39.30. So the floor of this, the immediate support, is down to the latest down fractal coinciding with the Bollinger, so down to 38.52 territory. Okay. So stocks are down after the inflation shock. Dollar on beat against all the major currencies. What else? What else? Oil a bit slightly eased a bit. It has a small pullback like a correction. Euro dollar sharply lower, cable sharply lower. Um, what else? I think that's pretty much it. Gold, gold extends its pullback below 20-day moving average. Sorry. Uh, and that's pretty much it. Let me check, double check for questions. Okay. Yes. Uh, Recession is here, not solely in the US, in Europe, and all over the world, unfortunately. Now, because of the aggressive tightening and the fact that the labor data, the labor market in US remains intact, not significantly impacted, no, the dollar the dollar is not expected to get weak in the long term. So in general, the outlook remains very, very strong, positive for dollar. Okay, for the upcoming months, because the time being, the Fed has signaled increasing of rate hikes in July, in August and September. So for the upcoming months, based on what the Mr. Powell said, due to the tightening, the dollar is expected to remain strong. Now, if in September, uh, eventually the Fed signals that tightening is over, they're gonna post tightening, and etc. Yes, we might see dollar getting weaker, but for the time being, and based on what we know so far, the dollar remains strong overall. I'm not sure that whether you referring, I don't know, usually referring to the long term because you mentioned J.P. Morgan, my dear Zibusiso. So a recession is the theme of the year of 2022, of 2023. I'm afraid the worst are in front of us, literally. Um, so, however, during recessions, okay, um, yes, the country's currencies tend to depreciate as well. But the Fed was the very first after no, it wasn't the very first. Actually, it was Bank of Canada that acted first, and RBNZ and Australia that acted first. But yeah, for the time being and until September at least, if we consider what Fed mentioned, due to the tightening, the dollar is expected to remain a bit. US will enter a recession like all the rest of the world, but uh, we cannot really tell for sure until the end of the summer. Okay, because for the time being, despite the increasing inflation, the jobs market are doing fair. I mean, we didn't have a slowdown yet. We don't have a slowdown. We have seen a slight slowdown. Neither, okay, we have seen a bit of an infection in an impact on the consumer confidence and on the consumer, yes, on the consumer confidence and on the gross domestic product due to the rising prices, but nothing substantial yet. So we cannot really tell until fall, until the end of the summer. Um, but yes, US will enter recession and like all the rest of the world because of the inflationary pressures. Um, but the key question is how deep the recession will be, because it's unlikely to be as deep as European ones. European one, the European, I think Europe will suffer the most. Uh, that's why they kept rates unchanged as well so far. But the situation with the rising inflations, with Ukraine and everything, yeah, Europe is in a very deep recession. The downturn, the economic downturn, and the company and the slowdown is coming for US as well. But yeah, the picture will be clearer after the summer. So August, September, we will know based on what the Fed speakers will say. But until then, the theory, I mean, the policy, based on the Fed's policy, on the current technical picture, the weekly technical picture and monthly technical picture of dollar index, it means it shows that dollar remains on bid. I'm not referring obviously to intraday consolidations, right? Let me just get rid of that as well. But yeah, momentum is still to the upside for dollar. So yeah, uh, yeah, that's it, my dear Siposito. But a bit confused about dollar cat, though. If both are having news released at the same time, like today, how do you trade? You're waiting for the noise to be over, and then you're trading the dollar cat. That would be my reply. But okay, okay, this is your for it. Dollar had a disappointing news, right? Inflation is rising, but that means, as we said, that that's a pressure for the Fed to increase rates. So that supported the dollar. So that gave a boost to the dollar. Canadian data now, what we have from the Canadian data is that unemployment remained um, slowed down a bit, slightly. Um the average hourly wages increased, participation rate unchanged, so pretty much neutral to slightly positive data from Canada. But even though we had bad news from US and good news from Canada, the dollar can remain to the upside. Why? Because dollar is for the time being the the one on bid. So how you trade it? You wait from the noise to over, just and you're checking your oops, you're checking your indicators, my dear. Let me just uh where's my dollar cat? And you're checking your indicators. So what we have over here? Okay, we have something looking like a hummingbird over here. A fast moving average are keep rising higher, keep pointing higher, MACD is positive. RSI though slowed down a bit. Sorry, stochastic slowed down a bit. RSI keeps rising, but it's at the overbought territory. But it seems that there is still momentum. Hmm. Okay, so intraday dollar cut remains presents based on the momentum indicators further bullish bias. So yeah, you need to rely on your indicators, but wait until you are sure, okay, about your entry. Okay, so that was it from me, guys. I think I covered everything. I'm gonna call it a date. We're gonna have a briefing next week in Instagram, like we used to, um, on Tuesday, and we're gonna host two Facebook and YouTube lives again next week based on the agenda. So since we have Bank of England, Bank of Japan, we have Fed as well, and SNB as well for banks next week. We're gonna have probably we're gonna have, let me just double check. We're gonna have um, most probably, I will say, Thursday and Wednesday and Thursday. Live analysis should be next week on Wednesday and Thursday. But anyway, if you subscribe yourselves into our YouTube channel and follow our Facebook account, you're gonna see the events anyway. So stay tuned. Thank you very much. Hopefully my analysis helped you even a bit. If not, I'm here, both of us actually, both me and Stuart. Ask anything you want. Send us a text in the hot forex in the HFM. Actually, we have rebranded. We are evolving. So in HFM account, Facebook account, HFM, Instagram account, HFM, Telegram account, whatever. Send us your questions and we're gonna try reply as soon as possible. Okay, thank you very much. Have a great day ahead. Have a great weekend ahead. Take care because a lot of volatility is expected next week as well. And I'm gonna see you next week. See you. Bye bye.